let's talk about affording a home. Hello and welcome back to Homes by Izzy. I'm a real estate agent in Los Angeles. Today I am sitting down with my colleague and friend Michael Glick. He is a mortgage broker in Southern California. He's been doing this for 30 years. He's a wealth of knowledge. And we are going to talk about affording a home. We're going to touch on debt to income ratio, what your income should look like to afford a home, down payments, and more. So let me know what you think in the comments. I will leave his contact information as well as my own in the caption, and share this with someone who might find it useful. Okay, I really want to talk about affording a home. What should somebody's income look like when they're trying to buy a home in Los Angeles area?
If you were going to look and buy a home for $1 million, the ideal, if you could, would put down 20%.
Right.
So 20% of $1 million is a down payment of $200,000, gives you a loan amount of $800,000. When you're figuring out debt to income ratio, you're taking the housing expense. The housing expense is the payments, the principal and interest on your mortgage, the monthly property taxes, and the monthly insurance. So on $1 million purchase, your payments would be approximately, principal and interest would be approximately $5,350 a month. Your property taxes would be approximately $1,040,000, and you're talking about homeowners insurance policy without earthquake is probably going to run you somewhere around, say, $225 to $250 a month. You add those up and you're going to be somewhere in the area of $6,600. On $6,600 a month, if you have completely clear credit, you're going to need to make an income of somewhere in the area of about $175,000 a year. That's about what it comes out to be. Now, if you had other debt, let's say you had a car payment of $7,800, $500, you had credit card debt and minimum payments of $100 a month. Maybe you have a student loan. If you have $1,000 a month in outside debt, now you are limiting that $1 million purchase as far as qualification. The basic guideline is you really have to have a debt to income ratio of 45%. You can go higher, but that's really the ideal one. You can go up to as high as 50% when you're using a mortgage banker. If you're using a bank, the traditional bank, they're a little bit more stringent. They'll probably cut you off at 43%. I know I mentioned you want to be ideally about 45% your income to debt ratio. There are programs. If you're in Ventura County, as long as you keep your loan amount at $948,000 or less, and in LA County, $1,089,000 or less, there are programs where you can go higher debt to income. There are some programs you can go as high as 55%. People come to me sometimes and I call it a box loan. If you have no debt and you're just a regular salaried employee, and you're making $20,000 a month, you're golden. You can go anywhere you want pretty much to get qualified. It doesn't mean the rate's going to be the same, but you can pretty much get qualified. But then there's what I call the out of the box. If you're cleaning out your desk and you're trying to consolidate everything and put everything inside of a box, some things are going to fit, some aren't.
Right.
The things that aren't fit in the box, do you throw them away? Of course not. You take them, put them on the side, and do something else with it, right? So an out-of-box lender means there are various products out there that you can still qualify for. There's bank statement loans. So if you're self-employed, if you own a restaurant, if you're an attorney, if you can provide 12 months bank statements, we basically use those, that's your income. So it's not to think, well, wow, I make $300,000 a year, great, but my bottom line is I'm only showing 100.
Right.
You're not going to qualify traditionally. That's not going to happen. But you will qualify for something else. So there are alternative financing products, especially when you go with a bank or broker.
Right. So when someone is looking to buy a home, how much should they have saved for a down payment? Whether that's money that they have saved up or if they're getting it gifted to them, what should their down payment look like?
Okay, ideally, if possible, 20% of the purchase price. That's ideally. That really only puts you in a small category because not everybody has 20%. You can put down as little as 5% in some products. You can put down as little as 3.5%. What are the advantages and disadvantages? Well, the advantages of it, you can still buy a home if you don't have money stashed. The disadvantage, if you want to call it that, is obviously the larger your loan amount, the higher your monthly payments. But there are some people that make a lot of money, they just don't save, and they may have a lot of debt that doesn't even show up on credit. Maybe they belong to a country club. You have medical bills. You're just not a saver. You can still buy. And when you talk about qualifying, it's not necessarily the purchase price you qualify for, it's the loan amount. What you need to know is you need to sit down with yourself, your wife, your partner, whoever you're looking to buy it with, or if it's just by yourself, and sit down and figure out a budget. How much money are you comfortable with paying per month in your mortgage? That's the starter. Because there's people that come to me sometimes and say, oh, I'm looking to buy something for $2 million.
Right.
And what are you comfortable with your payments? I'm comfortable on an X. Well, that X number, not even close. You might only qualify for an $900,000 loan. So you need to find out your budget. That's probably one. Two is you need to know how much money you're going to be able to come up with a down payment, whether it's your money, gift from a family, if wherever you're getting the down payment from. That determines your loan amount. And the loan amount is what you qualify for, not necessarily the purchase price.
Thank you for watching Michael and I's video on affording a home. I hope you found this valuable. Again, please reach out with any questions that you have and share this with somebody who might find it useful. Talk to you soon. Bye.